I'm at CarMax today because they just sent a massive warning out to the entire car market. The stock market is freaking out. Dealers are panicking and your car's value might be next. You hear that siren? That's not just background noise. Those are warning bells going off across the entire economy. Look around me. CarMax has inventory stacked absolutely everywhere. They have so many cars, they're literally parking them in front of other cars because they're running out of space. When the largest used car retailer in America suddenly sees its stock plummet 20% overnight and refuses to tell investors how many cars they expect to sell, that's not just a company problem. That's a 5-alarm fire for anyone who owns a vehicle in this country. What I'm about to show you isn't just about CarMax's business troubles. It's about why your car's value could collapse overnight and why dealers across America are entering full-blown panic mode right now. Check this out. They've got rows upon rows upon rows of cars. They have so many cars that they're actually parking them in the driveways in front of other cars. I've been tracking this location for years, and I've never seen inventory levels like this. This is the first time in 2.5 years that used car pricing slightly increased after being pretty flat for the previous 6 months. But here's the problem. All this inventory isn't moving. So here's the thing. CarMax just reported their earnings, and after they did that, their stock dropped by about 20%. And it was all about guidance. All the stock market cares about is what's going to happen tomorrow, not what you did lately. The car market is such a tricky place right now that CarMax pretty much just threw up their hands and said, you know what? We don't know what's going to happen. They basically cut their expectations of vehicles they plan to sell over the next 4 years. Why? The news comes as 25% tariffs are in effect on all U.S. auto imports and additional tariffs on parts. They pose a threat to vehicles made in the U.S. In a Goldilocks situation, prices go up and margins stay the same. But when you increase prices, it takes buying power away from consumers. So even though they might make more per vehicle, their volumes are going to crash. And this is a big problem because CarMax lives on volume. They have to move metal. Prices go up, ability to move metal goes down. And that's just the beginning of what's happening in this market right now. CarMax, meanwhile, plummeted to 14-month lows after limiting guidance in the wake of the current tariff uncertainty. This isn't just a bad quarter. This is a company that's basically saying, we have no idea what's coming next. And when the biggest used car retailer in America, a company with sophisticated analytics, market research, and decades of experience, throws up their hands and says they can't predict the future, that should terrify everyone in the industry. Look at what they actually did. They didn't just lower guidance, they eliminated it. They refused to tell investors how many cars they expect to sell. That's like a restaurant saying they don't know if people will eat food next year. It's that basic to their business model. The stock didn't drop 20% because CarMax had a bad quarter. It dropped because Wall Street suddenly realized the entire car market is standing on quicksand. Nobody knows if prices are going up or down. Nobody knows if consumers can keep affording payments. Nobody knows if the supply chain issues are fixed or just beginning. And check this out. CarMax specifically cited tariffs as a major concern. These aren't just affecting new cars. When new car prices jump because of tariffs, it pushes more buyers into the used market, which drives up those prices too. But higher prices mean fewer buyers can qualify for loans. It's a vicious cycle that's making CarMax executives lose sleep at night. They're caught in an impossible situation. Raise prices and sell fewer cars, or keep prices low and watch their margins disappear. There's no winning move here, and that's why they've stopped even trying to predict what comes next. CarMax has a serious inventory problem, and it's not just them. Dealers across America are drowning in metal right now. They bought high during the pandemic when inventory was scarce, and now they're stuck with cars they paid too much for that consumers can't afford at current interest rates. Look at this row of SUVs. During the pandemic, dealers were begging for inventory like this. Now, they can't move them fast enough. A dealer in Michigan told me last week, "We're not a car dealership anymore. We're a parking lot that happens to sell cars." Here's the brutal math. Every day a car sits on the lot, it costs the dealer money. They're paying floor plan financing, basically a loan on their inventory, at interest rates that have doubled in the last 2 years. A dealer with 100 cars on their lot is burning through thousands of dollars every single day just in interest. And check this out. This is one thing that could be an issue for the car buyer here. Look, If somebody has very good credit here at CarMax, they get 8.9% interest. But if they have challenge credit, they get 22.9% interest. And look at the difference in the monthly payments. Very good credit, $414 a month. And look at this increase, $591 a month if someone has challenge credit. That's the worry for consumers as the economy gets softer. We already know credit card delinquencies are very high, and auto loan delinquencies are at the highest they've ever been. So, you're going to have more consumers with challenge credit right now than ever before. As you stack those payments onto consumers, it takes some out of the market entirely. I mean, that's just a Jeep Compass. How much was this thing? Let me take a guess. I guess this Jeep Compass has got to be $24,000. Okay, a little bit better than I thought. $23,000 is what this 2022 Jeep Compass costs here at CarMax. The average consumer right now has challenge credit. So that's what they're going to be paying a month here at the biggest used car dealer in America. Most Americans right now only have $500 in their savings account for an emergency. Those car payments are absolutely ridiculous, and it's not just here at CarMax. This is the system we have in place right now. Now, one good thing about this environment that we are heading into is that if new vehicles are to go up and go up dramatically in price, well, it's going to push more consumers into used vehicles, and a lot of those would be new car buyers. They're not going to drop down to my kind of stuff. I sell cars that are $5,000 and under. They're going to drop down to 5, maybe 10-year-old vehicles that still are very expensive, very nice. They're not going to buy a brand new Ram truck, but they might buy something that's 3 or 4 years old. So this could be a positive for CarMax going forward, but it also brings in those consumers, going to bring in the demand for these 3 and 4-year-old used vehicles, and that's going to drive the prices up. And really at the end of the day, that can be good on a very short-term basis for a place like CarMax. But at the other end of the spectrum, when they're going and offering consumers money for cars, they're going to have to offer them more, because now other new car dealers, other franchise stores are going to be able to offer more. Places like Carvana are going to be able to offer more just because they can get more also on the back end of these vehicle purchases. So, one thing that CarMax does expect is that they expect for used cars to go up. And I know when you see all this inventory sitting at a CarMax like this one right here, well, that should be a great thing for CarMax, right? And for even like a used car dealer like myself. But really at the end of the day, it's not a net positive. For the cars that are sitting right here, if all used car prices go up overnight, yeah, that's good for the inventory that's sitting on the ground right now. They could reprice and sell cars for more. They were able to buy them cheaper whenever they bought them, and now their margins can go up. But that's not really how used car dealers work. What we do is we sell through our inventory. All this inventory is going to get sold through, and then we have to repurchase and repurchase and resell and repurchase and resell. And as the market moves, so do the prices of what we have to pay for them. So as the market's going up, the prices I have to pay at auction are also going up, but my margins don't necessarily go up with that. And here's the worry for the consumer, is that as the economy gets softer, we already know that credit card delinquencies are very, very high. And depending on who your source is, they're at the highest that they've ever been. And I know in the used car market right now, new car market, auto loan delinquencies are at the highest that they've ever been. So you're going to have more consumers that come into the market that have challenge credit right now than ever before. And as you stack those payments onto those consumers, well, it takes some of the consumers out that can even afford the monthly payments to be able to buy. I mean, that's just a Jeep Compass. I mean, how much was this thing? Let me take a guess. I guess his Jeep Compass got to be $24,000. Okay, a little bit better than I thought. $23,000 is what this 2022 Jeep Compass costs here at CarMax. And then the monthly payment on that thing, you saw it for, that's an average car for the average consumer. And the average consumer right now has challenge credit. So that's what they're going to be paying a month here at the biggest used car dealer in America. So these are good numbers to use of what the average American is going to have to pay, what they can afford. And if they come in here with the challenge credit, well, it's going to be very, very difficult for them to get into one of these cars with that monthly payment. I mean, most Americans right now, they only have $500 in their savings account for an emergency. Those car payments are absolutely ridiculous right now. And it's not just here at CarMax. This is the system that we have in place right now, where your average car is $23,000, where your average monthly payment for those cars, or plus 500 over 500 a month. I don't know how people are surviving right now. What's happening is a credit collapse in slow motion. As interest rates have stayed higher for longer, consumers who bought at the peak are now struggling to make payments. The repo companies can't keep up. Storage lots are overflowing with seized vehicles. And here's the thing. This creates a downward spiral. More repos mean more used cars hitting the market, which pushes prices down. Lower prices mean more consumers are underwater on their loans, owing more than their cars are worth. Being underwater makes it impossible to trade in or sell without coming up with thousands in cash. So, they keep making payments until they can't anymore, and then another repo happens. CarMax sees this coming. They know the credit bubble is starting to burst, and they're positioning themselves for the fallout. That's why they're being so cautious about future guidance. They can see the storm clouds gathering even if they don't know exactly when the rain will start. So, what's interesting for me to see at CarMax is that there wasn't a ton of available space, and in fact, there were more cars than I would have anticipated being there, because I would have thought that they would have had a strong selling season too. But here's what I'm hearing from a lot of car dealers, is that this was the worst tax time that they have ever seen. And it might be a situation where CarMax is experiencing that similar thing that I'm hearing from a lot of dealers where they loaded up for tax time. They were able to buy a lot of cars for tax time to prep for it, like we do every year. CarMax is a big used car dealer. I would assume they do the same thing that all of us small used car dealers do, and we buy cars so we can sell cars during tax time. Maybe they did that and the sell-through rate just wasn't very good. So they might be sitting on a lot of inventory that they thought that they were going to be able to sell through. And it turns out tax time wasn't very good, so they didn't sell it. So there might be a surplus of inventory that CarMax is having to deal with right now that they thought that they were going to sell. So now with saying all that, as it relates to used cars, well, used cars are going to be in the same boat. You might have dealerships, you might even have companies like CarMax that, with the anticipation of prices going up, maybe they raise their prices just a little bit. But as new car prices again have to retreat and come back down, well, so do the used car prices. Now, the one caveat is that if it gets very weak in the new car market for a few months, then what we'll have a massive lack of trade-ins. So that could actually push the lower end of used cars up, cars like mine that I'm trying to buy. This is what I don't want. That could actually be a massive disaster for my business. Because as we get more consumers that are coming into my tier of car, you think you got this massive pie of buyers for cars? You have a small sliver that are at the upper end. You have maybe 20 to 25% of the car buying population that looks at this kind of stuff that I sell. But then the rest of it, the massive slice of pie that's left, is all your mid-tier buyers. And if the economy gets softer, then you could have a lot of those buyers actually trade down and get into my range of product. But that's going to force other car dealers to also buy my range of product. And then if you get fewer trade-ins, because these new dealers are selling fewer cars because they're trying to increase prices, that's a setup for disaster for my niche. But I'm not as concerned for the new car side of things. I'm not as concerned for the upper end of the used cars for those prices to spike as much, because I don't think the economy, I don't think the consumer is actually there to come and catch any of these cars that need to actually be bought. That's the tough situation right now, I think, in this economy, that there's just not enough buyers to buy really expensive used cars, really expensive new cars right now, and we're already seeing cracks in the system. And at the end of the day, I think CarMax is actually managed pretty well. I think they're going to survive the storm. I think that price increases that come from tariffs, specifically onto new cars, new car parts and things like that, are probably a net positive for a company like CarMax. But I think that's going to be taken away of the softening that comes from the increase in prices from tariffs and things like this to the economy. So it might push more consumers to them because of the price increases on the new side, but I think the pool of buyers is actually going to shrink because of the softening from the economy, from all these things that are being put in place. So really at the end of the day, it's probably pretty much a wash, and depending on how severe a downturn we could go through, depending on how soft the economy actually gets, from these things that are being implemented, it could actually swing more towards the downside. Because I think the threat of the economy getting bad is a worse situation than a 10 or a 15% increase on the new car side, for even a place like CarMax, who doesn't necessarily have direct ties to that, but the consumers that could be pushed to CarMax. I think the pool of buyers is just so much more important to a place like CarMax because there's just always going to be buyers for used cars. No matter how the economy is, it's just going to be fewer of them. You need for a company like CarMax to do really, really well. You need money. You need velocity of money moving through the system. And you need people buying cars because they want to and not because they just need to. And at the end of the day, that's where CarMax is going to be able to step up their game and go to the next level because it's just not a necessity. It's because CarMax is going to get consumers that are like, oh, this is flashy new Dodge Charger. I really want this thing, and you know what? I deserve it. Nobody's having that conversation with themselves when money's tight, when groceries are through the roof, when everything that they are buying costs more right now than it did 3 months ago. People are trying to figure out how to save money. They're not watching where to invest my money, how to retire early. They're watching, okay, how do we budget for groceries? When they're watching that kind of stuff on YouTube, when the news is reporting on best money-saving tips, that's when CarMax is not going to thrive. But I think they're managed pretty well, and they'll be able to navigate the situation as best they can at least. One thing I do want to point out was a major concern for CarMax was going to be the parts cost for a lot of vehicles. And it's ironic that I'm standing in front of this F-150, Ford, one of the most recalled, if not the most recalled brand in the car market. It just means their stuff breaks a lot. And even at a place like CarMax right here, when they're getting a lot of these 3, 4, 5-year-old used vehicles that come in, there's a lot of things I can promise you that they're gonna have to fix before they actually put them on their lot to get ready. And all those parts cost a lot of money. So even if you're looking at a Ram, even if you're looking at a Ford where the part could be made here in the US, not all even the OEM parts are going to be made in the US. But if they're not made in the US because they're just cheaper, well, that cheaper part that comes from China, that comes from Canada, that comes from Mexico, even though there might be some exemptions that are coming down the road, those parts that were cheaper are now not going to be cheaper. So in that case, no matter where they're getting their parts from, parts across the board are going to go up in some capacity, and CarMax is going to have to still fix their cars. They're going to have to find the cheapest way to do it, and they're going to have to buy parts, and parts across the board are going to go up because of just everything that's going on in this market right now. At the end of the day, I think CarMax will survive the storm. Tariff-driven price increases on new cars might push more consumers to used vehicles, a potential positive for CarMax. But that benefit will likely be canceled out by the overall economic softening. The real issue isn't just price increases, it's the shrinking pool of qualified buyers. CarMax needs velocity of money moving through the system. They need people buying cars because they want to, not just because they need to. Nobody's thinking, I deserve that flashy Dodge Charger when groceries are through the roof and everything costs more than it did 3 months ago. People are watching videos about budgeting, not luxury purchases. So, what do you think? Is CarMax's warning just about their business, or is it the canary in the coal mine for the entire economy? Drop your thoughts in the comments below. And if you're thinking about buying or selling a car soon, subscribe for my next video on protecting yourself in this changing market. When the biggest used car dealer in America is worried about the future, we should all be paying attention.